In this presentation, I'm going to review something that we went over in yesterday's webinar. I hosted a Saturday webinar, and for those of you that either didn't see the email or did not sign up for it or signed up for it and did not attend, I promised a video recording of that. So we're going to go ahead and review that strategy. There were a few other strategies that we talked about during the live webinar, but that webinar was not recorded. So I'm going to review the primary reversal trading strategy that I promised everybody in the original sign up registration form. So this is a strategy that I've used for quite some time, and it comes down to reading the Bollinger Bands. The Bollinger Bands, a lot of times I see people using Bollinger Bands in their own ways, and that's okay. I mean, every indicator, is designed that way. There isn't one set way to trade. I mean, there's so many different ways to trade. As many traders as there are different trading systems. So obviously some are better than others, some work better than others, but when we're using the Bollinger Bands, I highly recommend that when you're learning a particular trading strategy, you get as much information or advice from the developer of that trading strategy or that indicator, and then follow what they're saying. And what I mean by that is, when I first started using the Bollinger Bands, I knew about John Bollinger, and I didn't spend a lot of time studying it. This was back in 2001 when I first started my trading career, and I was using other indicators along with the Bollinger Bands, and I didn't know exactly what indicators did. Now, I mean, I could see the correlation between price and price action and the candles and things like that, highs and lows with indicators, but you may be experiencing something like this now, or maybe you're still a little confused even after a few years of using different indicators. There's the temptation to use these indicators just because you're sort of drawn to them for whatever reason in the beginning, not any particular reason, but just you just like them for whatever reason. I mean, every trader is different. I did the same thing, and then I started customizing the indicators. So throughout my trading sessions, if I experienced a loss, and this is, again, back in the beginning of my trading career when I was really inexperienced. If I experienced a loss during the day, I would go back into the settings and I would change the indicators, and then I would roll the charts back to see how they sort of correlated the indicators, looking for example divergence and things like that, and I would look to see how they correlated with that new change in the values of the indicator to what just happened. So what I would end up doing is changing the indicators throughout my trading day, and I didn't have any accurate data. I wasn't leaving the indicators alone long enough to see any consistent results, whether there was a pattern or not there. And the other issue was, again, going back to just not knowing and having enough information about the indicators that I was using. I didn't know. So when I really started to study indicators, and I knew that that's where a lot of my problems were, and I needed to master indicators, especially the ones that I chose to use, I needed to find out what they did. So different indicators do different things. Very often you'll see indicators, or you'll see charts with inexperienced traders, and they have two of the same type of indicator, so they're really getting double confirmation. They're getting the same type of confirmation. When you're looking for confirmation for a trade setup, whether it's a high or low or something like that, to help you evaluate whether or not you have a trade, you want to have multiple forms of confirmation. So that requires using indicators, identifying and studying indicators, identifying the right ones that will help you in these specific conditions that you're trying to trade in. Now, some people like to trade breakouts. Some people like to trade reversals. There's so many different ways to trade. And some people like trading them all. Some people only like trading one or the other. So you have to sort of pick what it is you're going to be doing, what you're comfortable with, and then get to know the indicators that you're going to be using. By studying with John Bollinger, that's how I learned which indicators were appropriate. Now, on occasion, you might see a video, and I try to remind everybody as often as possible, because sometimes they'll say, well, how come you say this but you do that? Sometimes you might see a chart or a video with a chart that has two indicators that basically do the same thing. It's not that I'm looking for double confirmation. I'm just saving space and saving time on that chart. Sometimes when I have a trade that's starting to set up, at least I sit up and I pay attention to it, and then I wait for that particular setup to give me the closed completed candle, And then looking at those indicators, sometimes again, there'll be double form of confirmation there, but that's not the final step in my confirmation for that particular trade. I will then switch to the appropriate page for that particular technique, which leads me to what we're looking at here right now. So this is my reversals chart. This is a template that I created for the MT4 platform, and the first indicator that you see is in the price pane, the window there. You can see the Bollinger Bands. You also see the moving average. The next indicator that you see is the Woody's CCI indicator, and then the next one in the middle there is %B, and then Bollinger, the bandwidth. Now these are the ones that John Bollinger recommends you trade with if you're going to be using the Bollinger Bands, %B and bandwidth. And he said many times, if you took away all the other indicators away from him, aside from Bollinger Bands, the two indicators that he would pick, if you only gave him two options, two indicator options there, he would choose %B and bandwidth. He would do just fine with those two indicators and the Bollinger Bands. It's important that if we're going to use Bollinger Bands, we learn to use them the way the developer suggests, at least in the beginning. At least in the beginning, until you can craft and develop your own techniques with it, if that's what you're trying to do. I don't particularly care to develop a brand new trading strategy and incorporate brand new indicators. The amount of time that it would take, I mean, that's just not the part of trading that fascinates me. The part of trading that fascinates me is the ability to earn profits just about every day and consistently, so that I can make a living, my entire living, off of trading exclusively. I'm assuming that most of you that are watching this presentation are thinking the same thing. So we're using these indicators because John Bollinger recommends we do, and we want to study them and master them and understand what they do. There are obviously other indicators that he talks about, but these are the two primary ones. Now these two indicators, if you're going to be using them on the MetaTrader platform, you have to go do a Google search and find %B indicator for MTI, and then MT4 platform, and then bandwidth indicator for MT4 platform. And then you can download that onto your computer and then install that into your MT4 account, your platform. You want to do that before you set up the charts like this, because if you try to set up the charts, obviously MetaTrader doesn't come built with the standard indicator for %B and bandwidth. You'll have to add those. At this point, we're looking at a 30-minute chart. So when I'm trying to trade reversals intraday for day trading, and when I say day trading, to me, what it means to me, now it could mean different things to different people. Again, as I've said, there's so many different ways to trade, as many ways as there are traders. So to me, what day trading is, my expectations are that I would get into a trade during, let's say, for example, the London session. Now I get trades sometimes set up during the Asian, and I get a lot of trades, a bulk of my trades during the New York session. I actually prefer, if I was forced to pick just one trading session, I would pick the New York session. And for many, many reasons. I talk about it in the trading course. I talk about it all the time in other videos. I'll save a lot of the time here just to say that there's a lot more participation. There's a lot more volume during the New York trading session, and the moves are a lot more consistent for the most part. So when I get into a trade, I expect that the trade's going to hit its take profit target. I hope within the same session, especially if I'm trading around some economic data that's significant. And the surprise in those numbers is significant enough to cause a reaction. Otherwise, it's possible that I could get into a trade, let's say during the London session, and I don't end up hitting, the price doesn't hit its target until the end of the day, maybe at the end of the New York session. Or sometimes I have to hold on to the trade for 12 or 18 hours. I can't control that. We're looking at last week, price range on Friday on the dollar yen was just incredibly tight. I mean, I saw in so many different places on the internet, people were complaining just how tight it was. It was just before the Easter holiday. So it happens. It happens. We can't control it. We just have to manage the position. So when I get into these trades, I would like to see price reach its take profit level within the same session, but hopefully within the same trading day. And however long that takes, it just means I'm going to have to manage the trade a little bit longer. This is a 30-minute chart. And then I'm also watching the 1 hour chart. I'm going to switch to a 1 hour chart. This is the 1 hour chart. Now, the point in time, and this was a trade that we took, this was on April 12th. So you can go back to April 12th. This is the pound dollar. I'm going to show you this reversal. And I'm going to show you why. And then I'm going to remind everybody that's watching over and over that this is the way it works on this particular day with this particular trading environment. The next time you see it, it might be a little bit different, but the structure of the trade is what we want to confirm, and we want to find that price pattern, that structure, these things that lead up to confirming whether or not we actually have a trade. Now, there were many opportunities to trade the pound dollar throughout the week. It's just that with this reversal right here on April 12th, I had to wait for price to move up and reach the actual high for the week. So this is a 30-minute chart. I'm going to switch to a 1 hour chart. The 1 hour charts are very important for me when I'm day trading. Very significant. I know I've read, just like you may have, some people say it's impossible to trade off of a 1 hour. Other people say it's impossible to trade off of a 5-minute chart. You know, if it works, it works. I've been using this method for many, many, many years. This is exactly how it works. And the 1 hour time frame, with all of the years of testing, I've been trading since 2001, and I've tested everything I've ever done. With all of the testing that I've done, the 1 hour chart for me, with the system that I use, is the most consistently predictable and reliable method or time frame for not only identifying a good solid trade that's going to pay me anywhere from, let's say, 15, 20 to maybe even 55 pips or more, but it also gives me a better idea of what's going on in the market. So I'm going to switch to the 1 hour time frame, and you can see here what was going on for the week. So April 12th was just before the end of the week, and here's the start of the week, this dotted line right here. I put these dotted lines on my MetaTrader platform just so that I can go through the process of actually identifying where the beginning of the week and the end of the week is. I know that, you know, some chart programs will automatically draw those period separators for you, but I'm more of a hands-on trader in the sense that if I put those indicators in these lines and these support and resistance levels and period separators, if I put those in manually, I'm more likely to remember those. They're going to be more important. I'm going to draw my attention to it, and it's important to me to know where the week's high and low is at different times throughout the week. Sometimes it doesn't matter, but it will matter when price approaches resistance or support. Now, it did that earlier in the week, and then it did that later, again leading into April 12th, when we had this reversal trade that paid off a lot faster than the one previous. So you'll see that here on the 1 hour time frame, and this is exactly what I'm doing when I'm using this reversal technique. I'm leaving side by side both the 30-minute and the 1 hour time frame. So I'm splitting the screen, and over here on the far left, on the left side of the screen, I would have a 30-minute chart with the same indicators, and then on the right hand side I would have the 1 hour. The reason is that sometimes I can get an early entry with the 30-minute chart. There's nothing wrong with that. If I get in on a 30-minute candle, meaning that, let's say that the candle pattern closed and got me into the trade at like 10:30 or 11:30 or 12:30, I'm going to continue to watch the 1 hour chart, because when the 1 hour chart confirms, it closes, gives me confirmation. I know that I'm in the right direction. And very often with U.S. economic data, there is news at the top of the hour, meaning at, let's say, 9 o'clock, 10 o'clock, 11 o'clock at the top of the hour. So that is another reason why I'm watching the 1 hour time frame. I'm looking for additional forms of confirmation while I'm managing the position, so that I know I really don't have a lot to worry about, or maybe I should sit up and pay attention because things aren't working out the way I want. If things aren't working out the way I expect, I want to identify that it's likely to fail quickly, because I can close out that trade and not use a 55 pip stop loss. I don't want to take that kind of a hit. If I can identify that the trade's going to fail and I'm minus 17 pips or 21 pips, well, then I'm going to take the loss there. It's going to be easier for me to take a smaller loss and then move on and find the next good trade that's confirmed, that works, and then I can replace the loss quickly. So as Thursday, Wednesday was moving along and it was bouncing around the lows. I mean, this is a 1 hour time frame, so you can see how long I had to wait, and I wasn't making any decisions here on this particular pair because it wasn't at the week's low and it wasn't at the week's high, and it's also not a breakout trade. So those are the two primary trade strategies that I'm going to be using, is the breakout trade, or the continuation breakout trade, or the reversals. I have a couple of different reversal techniques, T2 pattern and a Tech 1 trade. The one that we're going to talk about today is the Tech 1 trade. Now the Tech 1 trade on the 1 hour chart is right here. I'm going to show you what it looks like on the 30-minute chart, but what I'm basically looking for or waiting for is price to reach either significant support or resistance, and in this case it was the week's high, and I'm looking for divergence in these indicators. Sometimes there's economic data that's delivered about the same time that these reports, that these setups develop, where price is reaching resistance. Maybe it spikes up but closes. Maybe it's the headline number that causes the spike, but then eventually you wait for the 1 hour candle and it closes below that support. Well, that's not a breakout to me. If it would be a breakout if the candle would have closed above that weekly high, that resistance point there, but it reversed and pulled back down, and it takes a great deal of patience to sit and trade like this. I know a lot of other people need a lot more activity. They want more trades. That's one of the reasons why I don't drill down to a 5-minute chart. I used to trade off of a 5-minute chart years ago when I first started trading. I was scalping, but it wasn't providing me the way I did it with a lot of consistency. This is the way that is consistent for me. I've been able to stay in this business as long as I have because I wait. I'm very, very patient, and I wait for opportunities just like this. And again, for me, with the system that I'm using, the 30-minute and the 1 hour chart are extremely reliable, not just for helping me confirm the trade, but getting me into the trade and then identifying the take profit levels. So I'm going to show you the take profit levels, but this is the area that we're looking at for that resistance. During the week, during late Wednesday, Thursday, I wasn't trading at all the pound dollar. This is the pound dollar. I was looking for other trades on other currency pairs because there could be, let's say the dollar yen is moving, right, during the Asian session, something like that. It doesn't mean that I won't have any trades at all just because I'm not trading the pound yen, the pound dollar here. It's just that I'm not going to be trading or executing a trade on the pound dollar just yet because I don't have my technique, my strategy here. So that's what I'm waiting for. I'm just waiting patiently, watching, coming back to this chart and looking at the price levels relative to resistance or support. So now we're going to go to the 30-minute chart. This is, again, the same resistance area right here, April 12th. And you can see how there was a spike, but the candle comes right back down to the week's high and closes right at it there. It does not close above, printing that continuation breakout signal candle. So I wasn't tempted to go long. I was expecting that it looked like it was probably going to reverse. Now, yesterday when I hosted the webinar, we went into great detail about the Bollinger Bands and how the candle patterns, what makes me comfortable when I see it. So very often when I see these moves like this outside of these Bollinger Bands, it doesn't mean that it's not going to reverse like this. It certainly can, and it will, especially when we're looking at what is more significant. Resistance is actually more significant than just the Bollinger Bands themselves by themselves at some random location. So that was something to consider. That was one of the other reasons. So again, as I mentioned, we're developing confidence, we're developing clues, we're looking for clues, we're looking for confirmation to support the decision to take a trade like this and to determine, is it likely to reach some of the targets that we're trading to. So again, noticing that the candle here on the 30-minute spiked up but closed right back down, did not print a continuation breakout trade. That next candle closed, it didn't close more than the length of that previous bullish candle, the last strong bullish candle at resistance. It didn't close more than 50% of that length. I want to see it close at least 60% of that length. It didn't do that. So at the same time, sometimes the 30-minute is going to be a little bit choppy like this, but it's helping me set up with these indicators and the divergence, the possibility of preparing for an entry. Maybe the 30-minute gives me the entry because it's possible that this 30-minute candle could have closed and printed that engulfing candle or a lot deeper, which would have been an evening star pattern. I would have been comfortable with that. And then perhaps I would have gotten in with that trade at that location with the closed completed candle there, and then traded it to these targets. I'll talk about the targets in just a moment. But in this situation, I had to continue to watch both the 30-minute and the 1 hour. Here was my trade when this candle closed on the 1 hour time frame. But you'll notice that the divergence was all developing and building, and all of these possibilities on the 30-minute chart as well. It was giving me the opportunity to sit up and pay attention. It didn't give me the entry on the 30-minute, but sometimes it does. In this particular instance, on this day, April 12th, I had to wait for the 1 hour candle to close. On the close of that completed candle there, that was 1.3101. That was my entry. The 1 hour time frame. Going back to the 30-minute chart, let's start talking about the indicators. So we can see as price is moving up and testing the week's high, notice the CCI, the Woody CCI indicator. We clearly have a lot of divergence here developing. The next one here is %B, and you can see how bandwidth is also starting to turn to the downside, indicating that this and confirming that this is all slowing down here. This leg of this up move is is over with for the most part, and is likely to retrace. Based on the time of the day when this set up, and if there was any news, that would also help me identify and sort of have the confidence in trading and executing a trade with an entry of 1.3101 to a take profit level of at least 80, maybe 50 if it went any lower. I need to know that at this time of day when I'm getting into a trade, I need to pay attention to the news. Is the news driving it? Is there a lot of volume? Is there enough volume to expect price to drop all the way down to some of these take profit levels? Otherwise, I'm just going to be scalping. I don't really want to scalp. I want to take these trades that I know are consistent and reliable over and over and over again, and they reach these take profit levels. In a situation like this when we're trading inside a consolidation, and I'm going to go back to the 1 hour chart just so you can see the consolidation a little bit clearer. Here's that consolidation for the most part. In a situation like this where I'm going to trade and just fade that move, right? I'm going to fade the move where it retested the week's high, and it's towards the end of the week. I know it's Friday. I'm looking at the clock. I know I got to get into my trade and get out with a profit before, the trading ends for the day or for the week. I really don't want to hold on to my positions over the weekend unless I have to. So all of this is giving me, what take profit levels. Where do I want to trade it to? Well, what I do with these techniques is I repeat the same entries based on the candle patterns. I use the same stop loss, and then I use the same take profit level. Depending on the technique that I'm using, I use those over and over and over again. It's always worked like this. It always will work like this. I took into consideration when I developed my trading system the daily average trading ranges. And what I found myself doing in the beginning of my trading career is, let's say it's 2001. I just started trading. I see this candle pattern. I think, I got a great one. Where am I going to trade it to? What I used to believe and what I used to read in a lot of technical analysis books is that maybe it's likely to come back down to resistance, right? So I would think maybe I could trade it back down to the low of 1.3049 or 50. And then I would end up holding too long. I was thinking maybe it's going to go, maybe it's going to drop, maybe it'll go down here. I need more money. I want more money. These are the thoughts that were going through my head. And those are the things that were causing me to stay into a trade too long, giving back profits when it was at one point profitable. I just didn't know where to lock in profits. I wanted too much. I wasn't realistic about the possibilities of price moving from when I get into the trade to a take profit level that's consistent and duplicatable, meaning that it's always going to reach one of these levels over and over again, even in a relatively tight range like this. When I'm trading inside of ranges like this, I'm going to trade to psychological levels. I've always used psychological levels. Psychological levels, the ones that I use are the 00. That's a pretty considerable one, right? That's one of the biggest ones. The 20, the 80, and the 50. So if I'm getting in a trade with the close at 1.3101, the first target is going to be 80. If it clears 80, then I'm going to trade it to 50. If it clears 50, I would trade it to 20, and so on. You get my point. But I definitely want to get in and get out and lock profits in before price hits a significant support low. And you can see here was the actual week's low back over here after the open. But these multiple levels right here, with as much consolidation as there was that particular week, it could have bounced at any level, just like it did here. So I'm not playing around when I get into a trade like this. I don't want to get into a trade, and what I mean by playing around is that I'm not going to get into the trade and then hope for more, hope for more, hope for more. I get in, I take the trade, I trade it to the take profit level, and I either close out the trade and I'm done with the trade and I'm flat and I go back to looking for another trade on another currency pair, or I come back the next day and just repeat the same process over and over again. I'm not going to force a trade. So again, prior to this retest of resistance, I was really doing nothing on this pair. There was no continuation breakout trade for me to trade, and there was no reversal trade for me to trade at that point. Not one that I was comfortable with. And I also knew, again, you can time some of these events and watch with some of these more active trading sessions and look at the economic calendar. Sometimes they'll approach these support and resistance levels like this, and we can time it with the economic calendar and the reaction. So you can see that there was divergence here on the 1 hour time frame as well. Now, sometimes, and the reason why I have the Woody CCI here, sometimes I trade a particular pattern with the Woody CCI indicator, and it's called the ghost pattern, and it's basically a reversal. It's a head and shoulders pattern within the CCI indicator. And as I've said many times, and I have a couple of videos in the membership area, I talk about that I'm very, very particular about executing the ghost pattern, the Woody CCI ghost pattern. It doesn't always work, and I was looking for ways to improve it. So what I did when I learned that method from the Woody CCI group, I tried to figure out when was it failing, when was it not working for me, and I wait for price to reach, once again, just like I do with the Tech 1 trade, I wait for price to reach significant support or resistance. If it's not significant, let's just say it's in a range like this. Okay, let's say we have a low here, and then it moves up, and then it bounces around, and then price comes back up here. That high right there, if it turned around and dropped, and printed a reversal candle right here, that's not a significant resistance level to me. This is more significant. This is more significant. You can see where I'm going with this. You can see them clearly. These make much more sense. I tend to stay away from candle patterns when they're in the middle of consolidation. I don't like trading the ones that look like this. You get a reversal pattern and then it flips back up and then you get stopped out and then you get a reversal pattern to the downside and then you think you're going to sell it again and it goes right back up again and you get stopped out. I'm not going to do that. I don't trade in the middle of consolidation. I wait for price to then approach resistance and then fade that move. Look for a solid opportunity, just like April 12th. That was a solid opportunity. Now, one of the things that I was talking about earlier was the candle patterns and where they close in relation to the Bollinger Bands. There's a trade strategy that I use. It's called the T2 pattern, and it looks similar to what you see over here to the left just before the week closed from the prior week. There's a new low in price, and it's sharp. Very often it's even sharper than this. They're very often caused with economic data. There's serious reversals. This one was a little more dragged out. This was not a clean or as obvious a T2 pattern that I normally trade. But nevertheless, it is here. And I'm looking for price to develop and reverse. You'll notice that these indicators, that the candles, I want to see some of these candles starting to close above or inside of the Bollinger Bands on that the last side of that W bottom pattern. That's something that makes me more comfortable. It gives me more confirmation. It doesn't mean that it won't work if they close inside. That's not what I'm saying. But in most cases, some of the best reversals look just like that. But again, if in this case, you can see how these candles are closing outside and above the top Bollinger Band, it's okay in this situation. It was still fine. I still understood what was going on. What was more significant than just the Bollinger Bands by themselves was the resistance and the weekly high. This was consolidation. That is much more significant than just trying to find these little levels inside of the Bollinger Bands themselves by themselves. When I first started using the Bollinger Bands, I wasn't looking necessarily at resistance points. What I was doing was just trading reversals inside of the Bollinger Bands. And you can see that the Bollinger Bands aren't as clean. I refer to it as boxing in a range of consolidation. When I see resistance, that is like, it's almost like boxing in this range of consolidation. Here's a low, here's the week's low, here's another low. Now it makes a lot more sense when I draw these indicators and leave them in there, because you can see the Bollinger Bands just don't make that, straight horizontal line. It makes it a little choppy. It makes it kind of hard to read. You're looking at all these different things, and this cleans everything up to me. When I look back, I want to see the Bollinger Bands. I need to see what's going on with the Bollinger Bands. but I definitely need to be paying attention to the highs and the lows and this boxed in range of consolidation. So again, I'm looking for divergence in the indicators. Percent B is helping me with that. I also want to find and know that the move here with bandwidth is identifying that this is probably over with. This up move here is probably done. It doesn't mean that it's not going to, retrace and maybe bounce off of support and then go back up and not take out the high. It doesn't mean that it won't. It certainly can. It just means that this move here, this is done, right? This is a rally that went on. This is a 30-minute chart. This is a rally that went on for a few hours, and then it topped out. And I'm looking for a reversal, whether it's with economic news or just a technical trade at resistance. And I need to see this Bollinger Band, the bandwidth turning to the downside, helping me with confirmation here, along with, again, knowing that this was a key resistance level. The weekly high and the weekly low is very important to me. At different times during the week, it's not that important to me, but I want to know where it is. Here, during the week, when price was here at 1.3080, it wasn't such a big issue, where price was relative to the high or the low. It was right about in the middle of that range of consolidation. But again, when it approaches it, then I'm going to sit up. I'm going to start looking at the 30-minute chart. I want to see the 1-hour chart. One of those two time frames is going to give me a good clean entry. Sometimes I get the entry that's quick on a 30-minute time frame, and I'll take it as long as all of these indicators are confirming for me. And then I want to follow along as the trade is developing, along with the confirmation here on the 1-hour chart, because the 1-hour chart is really significant to me. So back to the take profit levels. 80 was the first take profit level right here, psychological level. I repeat these levels all the time, over and over again. And it made sense because, I really couldn't use accurately and comfortably the Fibonacci tool. I mean, I could dig down to a really small time frame, but I'm looking at a 30-minute and a 1-hour. I want to pay attention to the same time frames that I got into when I get out of the trade. So again, psychological levels help me take profits. Very, a good profits. I mean, these are that's good money, right? Getting in at 1, even with the spread of 1.5, and taking profits here at 80. So you're picking up 18, 19, 20 pips, something like that. That's not a bad trade. At that point, if I was thinking that price would go a little bit lower, maybe the next target here would be 50, which it didn't hit. That's okay. If I was going to trade it any further, I definitely want to lock in profits there at the first target. And then I would scale out. I would trail this. I would scale out, lock in profits at the first, and then scale out at the second, at the final target there at 50. But I knew. I mean, you could see that it was going to stay in consolidation. We were still looking at higher highs. Technically, they weren't great. They weren't solid, but they were still there. I mean, we still have to be aware of the price structure, what's going on, economic data. It's Brexit. We've got all these different things that are having an impact. But this was a perfect reversal trade. Now, I'm going to leave you with this idea that when I first started trading, I would sit down for 8 to 10, maybe 12, maybe even 16 hours on some days. And I just kept feeling like, besides the fact that I was losing money every day, I just kept feeling like I need to find a trade. I need to find a trade. I need to be in a trade. If price is moving up, there's got to be something there. There's got to be something there. And I was just confusing myself. I was frustrating myself even more. It's not possible to always find a trade all the time, every day, all the time. It just, I mean, you look at the dollar yen for a perfect example of that on Friday, just before the Easter holiday. I mean, it was so flat there. I wouldn't even look at that chart again. If I wouldn't even try to force anything there. Be comfortable. I guess what I'm trying to say is be comfortable with the idea that if you have a system or a strategy that you like, and you're still desperate, you might be really, really negative. Maybe you've blown up a few trading accounts and you've got a lot of money to put back, a lot of money to earn back. You're not going to be able to earn that money back making the same mistakes, frustrating yourself, jumping in and out of trades that you don't understand. If you have a system that you like this one, for example, for me, this one is one that I like. I understand it. It makes sense to me. So I do nothing when this trade isn't setting up for me. I leave it alone, or I go look at another currency pair. I wait. That's the patience. That's the test that the market's going to put you through. If I trade in and out of all of this consolidation, I'm going to chew up my trading account. Sometimes I'm going to win. Sometimes I'm going to lose. At the end of the week, I'm going to have maybe, if I have a profit, a small profit. I don't want that. I want a higher number of winning trades consistently over and over and over and over and over again, as often as I can get them. And the way for me to do that is to wait for these setups just like this. The other thing I know is that when price reaches a considerable, when price reaches a significant, I should say, support or resistance level, the rest of the market sees that. And if it's happening during a really busy trading session, I know that I can count on their behavior, whatever's causing that. I can detect that, I can see it, I can read it if it's the news, and I can trade that. And I'm trading with the rest of the market. I don't want to be the only guy going long when everybody else is selling it. I'm going to get stopped out. So I want to wait. I wait. I'm very, very patient. It's like hunting. Wait for that trade to come into your crosshairs and execute. When you trade like that over and over and over again, you become a lot more confident in your trades. You're not afraid of your trades, and you start watching what's happening here in the marketplace, what's happening here in price on the charts, instead of trading out of total fear. You don't know what's going to happen, and then you start looking for things that you want to have happen, and it causes you to change your mind. One last thing I'll say about the Woody CCI pattern, the ghost pattern. I'll trade it, and I like trading it, but like I say in the trading course, I trade the ghost pattern when it reaches a significant support or resistance level. I'm not trading every ghost pattern here that you see. I just don't. Sometimes they work, sometimes they don't. And again, I don't like that approach. I realize that I'm going to experience some trading losses, but my behavior, my approach as I'm at my desk, as I'm starting my trading week throughout the week, is that I want to be right 100% of the time. The only way for me to do that is to be patient, wait for the trade to come to me, and do nothing in the meantime but watch and analyze. Just because I don't have a trade, it doesn't mean that I'm out partying. I mean, I don't do that. I'm still putting in the same number of hours that it takes to confirm that I have a trade as it takes to confirm that I do not have a trade. And I'm going to continue to watch, just like everybody else does when they're waiting for a trading opportunity. It's the same amount of time. I have to put in the same amount of effort and work to confirm that it's not going to work as those that do work. So I hope that helps. This is a really, to me, it's one of the best reversal trading patterns. It's so consistent, so reliable. My favorite one, obviously, is the continuation breakout trade, but I didn't get a continuation breakout trade during this week on this pair. So I had to resort to the alternative, another. It's like having a toolbox, the right tool for the job. I then switched based on the price structure and the price action for the week, to a reversals strategy method. And that's what this particular, these indicators here help me do. Again, I'm primarily looking at the Bollinger Bands and then the two Bollinger indicators that John Bollinger recommends, these two indicators here. And then I'm also looking for divergence here in the Woody CCI and then that ghost pattern. That is just about it. So these indicators here, the Woody CCI set at 14, 20 and 2, and bandwidth I have down here at 16. Different time settings, if you're going to go to a higher time frame. Some of these strategies work on the daily time frame and the 4-hour chart. I do talk about that in my trading course. Right now I'm offering the trading course as a bonus with a paid subscription of the Trade Copier. So all of these trades I execute with the Trade Copier, just like this. I just want to show you, what it is that I'm doing behind the scenes. What kind of trades am I looking for? How long do I hold on to them? Again, not every trade, not every reversal Tech 1 trade is going to pay off this quick or in such a short a period of time. Sometimes they'll take a little bit longer. Other times they'll pay off within 30 minutes to an hour. It really depends on what's driving price at that time. But again, looking at the 30-minute and the 1-hour chart side by side, it gives me a great opportunity to start sitting up and paying attention that a trade is starting to form, and I want to be there when it develops. So I hope this really helps you with some reversal patterns. I really don't mess around with smaller time frames like the 5-minute, 15-minute, things like that. So I can't tell you what it's going to do if you try to test it on a smaller time frame. But you'll see that when I'm getting into these trades, I'm taking decent, healthy profits is what I refer to it as. I mean, I'm looking at, I'd like to earn 15, I'd like to earn 20, I'd like to earn 50 pips, not 3 and 7 and 5 and 4 pips at a time. I really don't want to do that. These are very, very consistent, but you have to wait for the setup. So again, I execute these trades with the Trade Copier. These are some of the trades just like you see them laid out here. This is exactly how I do it. Hopefully we'll get a continuation breakout trade that I can review in the next couple of days, and we'll do another webinar, and I'll create another video for that. But I hope you enjoyed this presentation. Again, if you missed the presentation, this is the follow-up. This is exactly one of the methods that we talked about during the presentation yesterday during the webinar. And good luck trading this week.